Okay. Hello guys, it is Tuesday, the second week of November, and it's 10:35 a.m. Eastern right now, and I'm going to be going over my two trades I took today. They were longs, and what you guys can learn from these trades. So these trades, I risked about 3 MEQ contracts on each trade. So first trade, I did 3 MEQ. Second trade, I did 3 MEQ again. Both were risking around 20 points for each stop loss. So this is more of a video to show or what you can learn about when to anticipate low probability conditions and how to just survive when you are taking trades they're not going in your favor, right? So I'm going to be going over why I took the longs today, and then I'm going to be going over the psychology topic about it. So we're going to pull up my chart real quick. Okay. I'm gonna put all this for this time frame. All right. So we're gonna do a quick top-down analysis and what I was looking at within price. So on the monthly time frame, we have been so monthly time frame bullish. Pretty simple, right? November's opening took out previous monthly high and all-time highs. So we basically have already taken the highs up here. Weekly time frame, you can see how we took this last down close candle, confirming a change state of delivery on the weekly time frame. We have also had this big displacement candle from last week's. This is our current weekly open right here. This candle right here, very small candle. You can see how we're creating this future weekly BISI right here. So I'm still bullish on price. I'm still bullish on price when it goes into some kind of discount, which is why I took 2 longs today, but we're going to keep dropping down lower. So on the daily time frame, we have this daily BISI right here. So yesterday we opened, came up, creating the wick, and then we came down, stabbing into this daily BISI, and then coming back up and closing. So the narrative was a internal to external from this daily BISI. So what I anticipated was next day to open, come down, create the wick, and then distribute back up to all-time highs. That was the narrative I had. So I was anticipating us to go higher for buy-side liquidity, basically. So let's go keep dropping down to the 4-hour. So when we drop down to the 4-hour, we have this 4-hour SIBI right up here. But notice how price just stayed into his daily BISI. Then once this 4-hour SIBI was created, we then pushed back up into it, rebalancing it from here at this candle at 6 p.m. from Monday. we would be anticipating an internal to external if we were bearish. But notice how we just started chopping around this PD array. It doesn't mean that this fair value gap is invalidated. It's still valid because all we're doing is really just chopping around, right? But if price was truly bullish, truly bearish, then it would have taken this low by 6 a.m. It would have taken this low right here, which is previous daily low. But instead, what we had was just SMTs down at these lows. So this low was not taken on NQ, while on ES, this low was taken. This is your SMTs with ES and NASDAQ. So this kind of gave me this confirmation that price was likely going to just keep continuing higher because of the failure of taking this low. So when we came back into this 4-hour SIBI, I was anticipating this 4-hour SIBI to be inverted or used as some kind of inversion to keep pushing higher. So I wasn't looking for shorts, just following the higher time frame order flow. So let's get out of this and let's go back to the hourly time frame. So on the hourly time frame, I was anticipating this low down here to be low of week. So I was anticipating that low to be the low of the week of the weekly print. Because if we're bullish, we're gonna expect some kind of open, low, high, close weekly print, right? And by the most recent data on the weekly prints, they usually occur on Monday. Well, what from I have seen and experienced. So I was anticipating this Monday to be low of week with SMTs, and I was in this market around 9 a.m. So if we replay this back to 9 a.m. before this 10 a.m. open, we could see how this internal failed to offer fair value. So this internal right here did not offer fair value to this low. So we didn't push from this area down here. What we did instead was close above this PD array. So you see how the bodies are closing above it, like that, around this area. If we're expecting price to be bearish, we would want a aggressive reaction at this internal down here. But we didn't. We had SMTs. We then had this internal failing to offer fair value. So if we're having body closures above this PD array, what we expect is this high to get taken. That's your external range right here. That created this internal range. We were also below the New York midnight open, and we were also below the weekly opening price. So we were in deep discount if price was to be bullish for the weekly print and daily print. So we were very big in discount. So from this hourly time frame, we also, I didn't really wait for this change state delivery right here at this candle. So the opening for this candle is 21,230. And you can see how we were closing on this candle with the 21,235. So we were actually validating this whole thing as an order block now. But I didn't wait for this hourly confirmation. So I kind of did a 15-minute CISD, which is probably what I shouldn't have done today. But I did already journal that for future references. But yeah, you can see how this candle at 9 manipulated straight down to this internal or to this inversion, and then you can see how we distributed back up into this high, which was what I was looking at and what I wanted to see in price. So let's look at the 15-minute time frame. So on the 15-minute time frame, from this internal here, so when we look at this low right here, which is low of week or low of day, in this move down, what is the last down close candle? The last down close candle is this one right here. This is your last down close candle right here. So from this area, I drew out my 15-minute CISD. And this was my dealing range from this high to this low. Once price pushed back down to this low, I was looking for longs. So I was more of like yeah, more like right here. So at this time right here, this is where I was looking for longs, because price pushed back down to discount. We had the 15-minute CISD, the failure of this internal offering for value, and SMTs at the lows. We were also below the New York Midnight Open, which is right here, and the weekly opening price. And we also hit the daily manipulation level, which I don't have right here for some reason. I'll add it in right now. So where's my daily manipulation? My daily manipulation is right here. So notice how we came down to this, below this daily manipulation level. This was big confirmation for me right here. So anything below this level would be considered manipulation if you're anticipating an open, low, high close daily print. So a lot of big confluences for me, and I felt very confident in this narrative going down the time frames. So now we're gonna go to the 5-minute. Okay, yeah, this is where I was looking at. Okay, so we had these SMTs at the lows. Now from this 5-minute time frame, we're gonna look for SMT. So this low, took out this one. Okay, nice. So this low here, took this one. This low here, this one. So we didn't take those. Okay, so this was your SMT right here, down at these lows at discount. And we traded, I was basically expecting a retracement to expansion. So let me go back. Let me go back to the 1 minute now. So on the minute time frame, or the 1 minute chart, I drew out my deviations from this high to this low. And I think I had the wrong projection this morning. It was more of like this one, but this was my projection. And I think it did hit the negative 3.5. Yeah, it did. So from this area, I was just anticipating that a retracement or reversal zone like that with SMTs and this hourly inversion. So yeah, this is my trade right here. So we had this 1 minute fair value gap right here. Let me make this smaller so I can see better. So 930 was approaching. This breaker and this fair value gap was your unicorn. So I got in around this FEG right here. This is the FEG I got in at. And this was my entry right here. Basically risking 20 points. So once price came down, 9:30 was the opening right here. So you can see how we were tagged into this trade. I'm pretty sure we also had SMTs at these lows too. So you see how price did not take this low while NQ did. So yeah, we did have SMTs at this low too. Like that, SMT right here. So I was very confident in this trade. I mean, I had a higher time frame backing me up, and I took this unicorn at 9:30. So I was expecting more of a opening, coming down, just stinging slightly into it, and then just distributing back up for the highs. That was basically everything I was framing off this long. Kind of like a institutional order flow entry drill, where you just sting slightly into the PDRA, and then boom, you go flying. But we didn't get that today. So you can see how I got stopped out right here on this trade. Boom, I get stopped out. Big down close candles. And this is where I start realizing, okay, so I got stopped out, right? There's only two options on why I got stopped out, right? One, I'm either wrong on the whole market narrative and what I was looking at, or two, it's gonna be an unfavorable day with PA that I am not looking to trade. So this was my thought process, right? There was only two options, either one or two. And once we came back up, this was like, okay, so 9:30 opened. It likely manipulated down, taking me out because I drew the wrong deviations. They were actually supposed to be like this. And I'm pretty sure we still had SMTs at these lows. Yeah. These lows right here not taken. Yeah. Okay. So we still had SMTs at the lows. We hit -2, -2.5. And then we came back up, inverting this, or no inversion. But we did have a one-minute CISD right here. Yeah, like that. So once I saw this, I was like, okay, yeah, I think I got manipulated. I'm gonna go and take another entry following the direction of the daily print. So once we had this, I was looking to frame longs once more at this FEG right here with my stop below this 1-minute CISD at 20 points. So I then got tagged into the trade, and here I was having my targets around Asia highs and above this 4-hour SIBI. So going back to the 1-minute time frame, I was tagged into the long, and then you can see how I just got aggressively stopped out. Boom, stopped out. So from here on this moment, I was like, okay, so I got stopped out twice. So from here in this moment, I was like, okay, I got stopped out twice, right? I got stopped out twice here. Let me go in here again. So I got stopped out twice on both of these longs. So what is the likely scenario that will happen going forward? So if I got stopped out twice, then the likely scenario is that one, it's either going to chop or I'm wrong, right? So after these two scenarios, or after these two trades, I just did not want to engage in price action anymore. But it makes sense why price is moving the way it is today, right? Today is a Tuesday. If I can pull out this real quick. Today is a Tuesday, non-red folder news. So it makes sense why price is behaving the way it is today. We also had a very big, large range day yesterday with New York. So it's definitely expected to chop around today, or at least chop around equilibrium. But so we have Monday, yesterday, bank holiday. Then we have Tuesday, non-red folder news, and we have CPI. So when can you expect high resistance liquidity run conditions? So days before high impact news events like CPI, you could expect low probability conditions. Since we have CPI this week, and on Wednesday, Tuesday will be the day before CPI. So this is where you can expect high resistance liquidity run conditions. PA that is just consolidating, or it's just retracing back to equilibrium, back and forth. So you're basically playing around a range. And it makes sense. It makes perfect sense. Today is not the type of day to be trading. More of just like skipping it, reading, or doing something else that is not pushing buttons on days like this. So this is the overnight PA on the 15-minute. You can see we had those SMTs at the lows that I saw this morning. And I was expecting the run up from New York to deliver to the dealer range high. But due to the timing of the weekly calendar, economic calendar, and the conditions that we had yesterday, New York chop was anticipated as well. Almost a 211 point move down from yesterday. So it makes perfectly sense. It makes perfectly sense. So people who are trading right now, it's like touching a hot stove. You're gonna get your hand burned. So it's better to just not touch the hot stove and go off about your day and just survive. Because it's not a good time to be trading today, especially when we have CPI tomorrow. So it makes completely sense why. And yeah, it's like a daily reminder, like, hey, like, you shouldn't be trading this. Like, it's not a favorable day to be trading. But yeah, I traded the price action today, and yeah, didn't go my way, and it's still a green day for me. So all I can really do is just manage my risk and keep the losses very small. But yeah, this is what happened today. don't want to touch this or engage in it. It's like touching a hot stove with your hands. Exactly. But yeah, the trade I took today had good narrative, good context behind the trade, and something I will take 100 times. But it was just wrong timing. That's all. Wrong timing of the day, of the week. So yeah, that's it for it. Don't want to make this really long. Just 2 lessons from today. Days before high impact news are low probability. And 2, if we're going to take 2 trades, both have to be effectively managed in their risk management. And yeah, this is all for today. Hope you guys enjoy your day.